Here are the triangle trend indicators on 6/25/2012 on the ES4 Renko. I didn't take any trades this morning, but I wanted to in the first 2 hours of trading. Anyway, I have an appointment I have to attend, so this is it for me for the day. But I wanted to point out something about trend lines, and I like trend lines. Now here was around 6:30 in the morning when the market opened here in California. I could have gone short right in this area here. And you can see there were 22 down bars, and that carried over from the high yesterday, 22 bars down here. Then there were 3 up bars, and then another 14 down bars. And I didn't take any of those positions because in here, this is where I could have gone short, but I didn't like the idea that the swing cycle and the swing cycle VB were together down here, and it was obvious that the swing cycle was going to move up because the momentum was still below zero but was moving up here when this turns yellow. And so there just wasn't a separation between these two portions of the indicator that I like to see, so I didn't go short in here. Now, if I was just paying attention to the DMI differential and just trading that, yes, it would have been an obvious short position all the way down in through here, and I could have stayed in that position. But I didn't like this. I didn't like the fact that the DIX had turned green right in here. So those two factors kept me out of going short here. And then the swing cycle kind of went crazy during this downtrend in here and was cycling up and down even though the downtrend continued. Now what I want to mention was that I like to put in the turning points, and these by definition have to be somewhat lagging in that the equity has to turn before you can put in the point where it turned. But you can make that lagging indicator into a leading indicator by using trend lines that go through the turning points. So here was a turning point right here, and this was a turning point right here after the 3 up bars. So there's an auto trend line indicator that is free that puts this in automatically in here, or you can just draw a trend line in by hand as I did over here. When this indicator puts in a down trend line, when it connects 2 or more of the turning points, as in here and here, it stays with that trend line and doesn't readjust. It doesn't change until it puts in an up trend line between 2 of the green turning points, and they have to be higher than each other in order for it to put in a trend line to the upside. So you can draw your own trend line in here, because this put it in between these 2 turning points, and then 2 more turning points came up here, but the software kept this trend line right here. So I put another trend line in here, which is more recent, which would be stronger than this trend line here, which was put in way back here. But you can see by extending the trend line how you can make what's essentially a lagging indicator, these turning points, into a leading indicator when the equity crosses above the trend line. And because these turning points, for whatever reason, buyers took over here and then sellers took over here, and the more turning points you have in the same direction, the stronger that direction is. because the buyers just can't overcome the sellers on these turning points here. So I like to use trend lines, and this is, I think, a good way to use them rather than through the close or the high or the low of the bar. I use it when there's a turning point in the equity and connect those turning points with a trend line. If you can't find the auto trend lines, and I think it comes with NinjaTrader, or you can download it from the NinjaTrader website. If you're already using the triangle trend indicators and would like that automatic trend line, let me know, and I'll send you a copy of it.